Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Tuesday, May 6th. So markets are broadly in the red today, and they are being impacted by two main headlines. First up is going to be tariffs. The United States is going to be meeting up with Canada today when the president and Canadian Prime Minister Mike Carney actually discuss the tariffs between the United States and Canada. And just yesterday, Treasury Secretary Scott Bessent said that trade deals and negotiations were actively underway. So investors are waiting to see what could potentially happen, especially between the United States and Canada, but also between the United States and other nations. Now, any sort of tariff deal between the U.S. and Canada would positively impact several industries, particularly on manufacturing, especially around cars. But investors today are really taking a look at the Federal Open Market Committee. That's the FOMC meeting that is kicking off today. This is when the Federal Reserve and the chairs and governors meet up and decide what they're going to do about the federal funds rate. But that's the rate at which the Federal Reserve lends money to banks and banks lend money to each other. And that trickles down and impacts the rate at which a bank will lend money to you, whether it's a credit card, a loan, a mortgage, anything. It's largely expected that the Federal Reserve is not going to be changing rates right now. Investors love to hear that there's going to be a rate cut. They do not like hearing that there is going to be a rate hike, but it is largely expected that the Federal Reserve is going to be holding those rates steady. But what investors will be looking out for in tomorrow's decision is what the Fed says about the future path of rate cuts and where they believe inflation is going to go this year, and if there's any signs of a possible recession. It's largely expected, and so investors right now are taking a little bit of a pause in advance of that FOMC decision tomorrow. Let's take a look at some specific ETFs today, particularly around Treasury bonds. So when it comes to these long-term duration bonds, I'm looking right now at TLT, that's the iShares 20-plus year Treasury bond ETF. It is in the red, down about 1/3 of a percentage point as the yields rise and the bond prices fall, because this is an investment that is not attractive to investors right now. So the yields are rising to make it more attractive to investors. And so investors right now are taking a little bit of a pause. And here's what is in the green, and that's going to be SGOV. That's the iShares 0 to 3 month Treasury bond ETF. Investors right now are not too keen about locking up their money for a long time and placing faith in the long-term economic picture for the U.S. government. And so they're willing to lock up their money for only a small period of time. And that's why you're seeing these short-term duration bonds rising and continuing to do well. Be sure to like, follow, and subscribe to ETF.com as we keep you updated on the markets, the economy, Federal Reserve decision, and of course, your investor portfolio.